Earnings, lots of news flow on that front. Bank of India reported their Q1 numbers. They've seen a 9.7% increase in the deposits. Net profits up also 9.8%. Rajneesh Karnatak, MD and CEO of the company, the bank, is now with us on the show. Sir, thank you very much for joining in. First, can you explain the improvement that we've seen in your net interest margins in the current quarter, and what can you guide going ahead? What explains the NIM improvement?
Yeah, thank you so much. If you see our NIM, it has registered a NIM. We have registered a NIM of 3.07% for June 24. This has sequentially improved. Actually, in June 23, it was much lower at 3.03, and in the March, it was 2.92. So NIM has improved. It is at the backdrop of our yield on advances, which has now touched 8.60%, an improvement of nearly 50 basis points. And cost of deposit is 4.82. So there is a gap of around 3.68% as far as between the cost of deposit and the yield on advances. This gap is also helping us in improving our net interest margins, which is now at 3.07%. As regards the guidance is concerned, considering the challenges which are there overall on the resources side and the cost of deposit which is rising, so we are giving a guidance of for March 25 a NIM of shade below 3%.
Okay. All right, got that. In terms of growth, right, loan growth, what are we looking at? Because I was going through your numbers in Q1, the NII growth has been about 6% quarter on quarter. Even year on year, it's a 6% growth that you're seeing on NII. Just asking you about overall loan growth for the full year, FY25, what are we looking at? And if you can break it up for us between corporate loan growth, retail, agri, MSME, where are you seeing revival coming from?
Yeah, so as regarding the credit growth is concerned, see, we have given a credit growth of around 17% on the domestic book, and overall in the global book, the credit growth is around 15%. For the guidance sake, considering the overall scenario, we are giving a guidance of around 13 to 14% on the global credit growth side. And as far as the mix is concerned, see, the mix will remain the same at around 55% will be our RAM book and 45% will be the corporate credit book. Within the corporate credit book also we are going for infra lending, industrial sector growth, and also on the renewable energy side. So these are the sectors where there would be growth. As we speak, there is a healthy credit pipeline with us of around 40 to 45,000 crores as we are speaking. So, and RAM also there is a healthy credit pipeline over there. Growth also has been good as far as the RAM is concerned. Agriculture has grown by 22%, MSME has grown by 13%, and retail has grown by 20%. Overall, RAM has grown by nearly 20%. So we are confident that the credit growth which we are targeting at around 13 to 14% on the global side will be able to achieve for FY25.
Any concerns on the asset quality? I can see your gross NPAs, net NPAs have actually improved. But some of the other banks or in the industry, there is concern about unsecured lending. What can you guide on asset quality and what is happening on the ground?
Yeah, as regards asset quality is concerned, if you see from our data, so gross NPA has come down in both in absolute numbers to 27,000 crores and in percentage terms to 4.62%. And it's a guided path which we are giving, and it is coming down on a sequential basis also. In fact, it has gross NPA has come down by nearly 2 percentage points on a YOY basis. As regards net NPA is concerned, for the first time we have come down below the 1% level. We are at 0.99% in June 24, which was more than 1% as on June 23. So there also we have shown improvement, and recovery also, if I tell you as far as the bank is concerned, 1900 crore was the slippage in Q1 for the entire year, for this quarter in fact, and the recovery that we have made is around 2700 crores, which includes cash recovery, which includes recovery from return of accounts also, and also recovery from the upgradation which has happened. So if we include the return of accounts also, so then this total recovery will be around 4,000 crores. So if you remove that, it is 2,700 as against flash slippage of only 1,900 crores. So 1.42 is the slippage to recovery ratio now with the bank. So that also is improving on a sequential basis and on a quarter-on-quarter basis. As regards stress in the unsecured book is concerned, not much of stress is there. Our unsecured book as far as the personal loan segment is concerned, we have a book of only 10,000 crore. That book also is mostly for the salaried class. In salaried class, majority of our loan book is for those accounts where the salary is coming with Bank of India and the credit score in that is around 700 plus in the CIC number. So that also guardrails we have put. With all these guardrails, we don't see much of a stress over there. And as far as the NPA book on the this personal loan segment is concerned, only 40 to 45 crore I think is the NPA in this personal loan book. So we don't see much of a concern as far as the unsecured book for Bank of India is concerned.
So would you have a number in mind, the gross NPAs by the end of FY25 and net NPAs, what are you looking at?
Yeah, so 4.62 is the gross NPA which we have touched now. So we would be giving a guidance of around 4% of gross NPA. And as regards net NPA is concerned, so we will continue to improve this net NPA which we have reached at 0.99%. And we should be at around 0.90 by March 25.
Thank you very much, sir, for joining in. That's Bank of India, and the sell-off continues. There is no buying in sight right now. More than 3% gone on the benchmark indices, and Japanese markets have closed, and it's the worst day on record for them since 1987. We will get into a very short break. We'll come back and keep talking about this mayhem that we are seeing this Monday morning.